optimism over a turnaround for Bitcoin has proved short-lived. Welcome to the Daily Forkast, June 2nd, 2022. I'm Megha Chaddah of Forkast, covering all things blockchain. After a strong start to the week, crypto markets reversed course overnight, with Bitcoin falling more than 6.5% in the 24 hours to Thursday morning in Asia. We'll take a look at that plus a whole lot more coming up. Let's get you up to speed from Asia to the world.
Join thousands of NFT traders who already start their day on CryptoSlam.
Let's kick off in Singapore. While the city-state is pushing forward with institutional plans for crypto, Deputy Prime Minister Heng Swee Keat has warned retail investors against it. In a speech on Tuesday, the Deputy Prime Minister said the crypto space is a highly risky area and investors have suffered losses or even lost their life savings in the recent Terra Luna meltdown, which triggered knock-on effects on the wider crypto market. He went on to say, quote, "Retail investors especially should steer clear of cryptocurrencies. We cannot emphasize this enough." The Monetary Authority of Singapore, or MAS, has consistently warned the public against trading in cryptocurrencies and took steps earlier this year to limit the promotion of crypto to the general public. In the past 2 years, the MAS has granted licenses and in-principle approvals to just 11 digital payment token service providers to operate in Singapore. The Deputy Prime Minister said the MAS will continue to evaluate applications from other providers and that building trust in the sector is important. Meanwhile, more crypto fraud in South Korea. Police there said they've arrested a man for allegedly stealing almost $700,000 using leaked exchange account information. The data was accidentally made available on the banned social networking platform by an administrator. Band is operated by South Korean internet giant Naver. Police said the man in his 30s was detained on May 13th and had used the crypto account information of around 90 people. One victim may have lost around $400,000. It comes as crypto crimes in South Korea are on the rise. The country's police agency has said the number of victims has been increasing sharply since 2018. Just last week, 14 people were arrested as part of a fraud case estimated to have cost 70,000 investors $3.9 billion. Make sure you check out Forkast.News for more. Over in the markets, Bitcoin has taken a tumble, dropping below the $30,000 mark Thursday morning in Asia, giving up most of the gains it made over the US holiday weekend. Forecast Lachlan Keller takes a look at the market action.
Bitcoin was down 6%, trading at $29,812 on Thursday morning in Asia, pouring cold water on its chances of posting a weekly gain after 9 consecutive weeks of losses. While still above its lowest point for the year, which came in late January, the world's largest cryptocurrency by market cap is down more than 56% from November 2021's all-time high of $68,789, according to CoinMarketCap. Most of the rest of the crypto top 10 also fell around 6%, with Ethereum dropping below the $2,000 mark it gained yesterday. Solana was the worst performer, dropping 13% and trading under the $40 mark for the first time since early May. One expert told Forecast multiple concerns are weighing heavily on investors.
I think Jamie Dimon coming out with these comments about a big hurricane coming to the markets and people being conservative has probably influenced a lot of thinking there. And I think at the moment, everybody's trying to get used to this new environment that we're in. Rising interest rates makes other assets look attractive.
Sullivan says the overhang from COVID, the war in Ukraine, and inflation are all undermining investor confidence. Tony Sycamore of Citi Index agrees, saying the concerns over higher inflation are unlikely to go away anytime soon.
Fed Reserve Governor Waller said he is not giving up on 50 basis point rate hikes until inflation gets back below 2%. Now, I can tell you categorically, there is no chance whatsoever that inflation is getting anywhere near 2%, not this year, not next year. The best they can hope for is somewhere around 5.5%, 6% on headline inflation. 2% is a pipe dream.
While the ending of the 2-month lockdown in Shanghai may ease some of the supply chain blockages that have been contributing to inflation, Oil prices are also a factor, with the Organisation of Petroleum Exporting Countries meeting today to discuss production levels.
The fact that Chinese demand has been reduced over the past 2 to 3 months, that's certainly kept crude oil trading around, let's say $95 to $110 a barrel. But with that demand coming back online, there just isn't a supply response available. We've tapped into strategic reserves. There's nothing else that people can do. There's nothing else that producers can do in this short period of time. That's going to push crude oil higher in my books.
However, Sullivan says it isn't all bad news for the crypto market, and Bitcoin in particular.
We have seen it, flirting around the 30,000 level for Bitcoin. And the fact that it keeps coming back to that level and sees reasonable support there, I think is a very good indication that it is becoming a more widely accepted alternative investment.
For Forkast, I'm Lachlan Keller.
US-headquartered MoneyGram will soon be adding USDC to its money transfer service, allowing users to send crypto which can be converted to cash. Will this be a start to transforming the world of remittances? Let's find out with Mark Lamb. He's the Chief Executive Officer at CoinFlex, a leading crypto derivatives exchange and yield platform. Good to see you again, Mark.
Great to be here.
Now, MoneyGram is tying up with the Stellar blockchain for this crypto-to-cash service. They are one of the biggest players in the remittances markets, and World Bank is expecting remittances to top $600 billion this year. Could this fiat-to-crypto ramp up become a game changer?
This is really incredible because when you can get cash on one hand and get out in USDC or put in USDC and get cash on the other hand, it enables the physical cash and remittances markets to connect into the crypto markets. And in a lot of cases, people just prefer USDC and other stable coins, CoinFlex has a stable coin, to the banking system. And so when you have one side of the equation able to use stable coins rather than banks, it's a game changer in terms of the fees. It's a game changer in terms of all sorts of things. And it means also in the background, MoneyGram can use stable coins as part of their transaction flows. So I think our view is really that at large scale, stable coins should be saving somewhere on the range of $500 billion a year for corporates around the world. And remittances are at the heart of that.
Talking about fees, El Salvador's president says using crypto can help save billions of dollars in hefty fees on remittances, which account for over 20% of their GDP. However, MoneyGram's CEO believes that expectations of such savings are inflated. But isn't a crypto fiat ramp up creating cost efficiencies?
There's this weird anti-network in blockchains where the more strong and powerful a network becomes, oftentimes the fees get worse. So it's kind of the opposite of a traditional network effect, where in a social network effect, the bigger a social network gets, the better it becomes for users. Here, fees often get worse in a cryptocurrency. There's blockchains that deal with that problem very well, Bitcoin Cash being one of them. Stellar, I think, is a lesser known chain. Their fees are probably very low because of that. Is it engineered to have low fees at scale? We'll see. I think the ideal situation is where someone's using a low fee chain and using a stable coin on top of that low fee chain. Because in that situation, there's not a lot of volatility. There's zero cost or near zero cost, sub 1 cent cost to move funds around. And in that situation, you should see enormous cost savings. In other situations, it might not be the case. It might be, if you use Bitcoin and Ethereum and use the native tokens on those exchanges, on those chains, it might be more expensive.
Now, remittances from well-off relatives in the developed world are such a big part of how people sustain themselves in countries like the Philippines, etc. Could crypto remittances become the bridge to hasten adoption across the developing world? What stumbling blocks do you see in real-life application?
Yeah, I think the biggest stumbling block is actually not enough companies like MoneyGram and the banking systems where they will plug into these things. So it's often very difficult to acquire, to buy or sell crypto or stable coins if you're in some of these countries. The banks might not allow it. The remittances companies might not have integrated with it. There will be all these integration and acceptance problems. And that's why MoneyGram's acceptance of USDC is really pivotal, because if they're accepting it, they're not exactly a bank, they're a remittance company, so they can potentially do things that banks might not be able to do. But because they're accepting it now, it creates another very, very legitimate form of on-ramp and off-ramp. Whereas if you don't have that, you might have to resort to the peer-to-peer markets. And there's a trust problem there. They're very deep, very liquid, but at the end of the day, you are trusting someone else with your money who isn't a big company. They're just an individual that's selling you, their stable coins or their crypto. In many countries, there are probably more users of MoneyGram than even bank account holders. There's probably a lot of people in the population that don't have bank accounts, but they do use MoneyGram because that's how they get cash. And that's how they get cash from their relatives in America or Europe, and that cash is what sustains them. So in a lot of countries, MoneyGram is actually even more important than a bank.
Well, a lot of things are called game changers, and this one might actually be it. Thanks for the conversation as always, Mark.
Thank you for having me.
And finally, here's a sneak preview of the latest edition of Word on the Block, where we go beyond the headlines. This week, Eric Anziani, COO of Crypto.com, takes a deep dive into the importance of stablecoins and what they're doing to get to 100 million users by the end of this year.
Yeah, so usually when you have these more positive cycles, there's a lot of money flowing in, a lot of talent coming in, and innovation starts to spur from it. And it's a little bit more challenging when you get into the bear market, but this is where people can start really trying to find product market fit, experiment, and test things out. The stablecoin front is still a very large land of experimentation. Yeah. It's still very hard to find the right recipe, and it's important that we continue to invest, because stablecoins are such a big piece of the ecosystem. They enable people to kind of go back and forth out of volatile assets in theory. So there's so much that needs to happen. For us, when these times comes, it's really about focusing on our people, innovation, building product that makes sense, iterating on our product, and preparing for the next cycle.
The full episode airs tomorrow, so do check it out. And that's the Daily Forkast from our vantage point right here in Asia. For more, visit Forkast.News. I'm Megha Chaddah. Until next time.